Good morning, it's Aquiles. Wise Up with Your Money Friday. How's everything going today? Well, let's get started. Looking at right now, futures are inching up right now. It's about 7:40 or so here in New York City on a very cold morning at 22 degrees. So let's get right to it. Personal consumer expenditures, the PCE. This seems to be the last inflation measure that the Fed is going to have in terms of data before their decision making next Wednesday. So we could see that. I think it's going to go up a little bit. We're not going to see a big move to the upside. But once again, more data coming from September that has been delayed. That is not really, it's kind of ho-hum. I hate to say that, but it's like big deal, you know? So let's take that into consideration with the markets going forward. I saw an interesting article today in the Journal talking about your 401k. Do you really know what target date funds can do with you? Now, back in the 90s, when I was first starting out in the business, target rate funds were just a way to get a balance. You know, we used to call them balance funds, and it was to get a balanced approach. Hey, it sounds good. You know, it's going to be concentrated to 2022 or whatever. But in reality, balanced funds underperformed quite a bit in terms of the market. Now, everybody's a genius when the market's going well, but when the market goes into the crapper and challenge and adversity comes into the picture, everybody either runs for the hills, sells out, does something stupid. You know, you don't have to do these things. So with the target rate funds, you know, I kind of see the logic behind it, but the actual, you know, the implementation, the execution starts getting really complicated and may not be in your best interest. And then I see people doing multiple year target date funds, you know, before they come aboard with us. I'm asking a question, what's the rationale behind that? And I never get a good answer. So next part that came into play in my thoughts this morning is, you know, we talk about aerospace, we'll talk about, you know, defense. I'd rather be in companies like a Boeing, like in a Raytheon, than in a Southwest Airlines. You know, airlines, the patterns, especially with what went on recently, you know, any type of event can really affect airlines more than the sector as a whole. You know, in other words, it's going to affect your Delta, United, American Airlines, but it's not going to affect your Boeings, and it's not going to affect your Raytheons of the world. Also, I hate to say this, but war is good for business. War is good for business. These companies pay a solid dividend, excellent growth there. I'm going to be on the Schwab Network upcoming this Monday at 11:30, talking a little bit more about some of the new companies. Now, people ask me all the time, Achilles, what's the kind? You know, what do I have to do to be a client? Excuse me. It's very easy. First thing, you have to reach out to us. I can't reach out to you, but if you're retiring, you know, the one thing I would say is, if you're in the retirement mode, you really need to talk to us. There are certain nuances in retirement that most people do not observe at all. And I'm here to tell you that you're probably going to spend a lot more in the first 6 months of retirement than you ever spent in the last few years. Second, if you're changing jobs, you're in a unique situation where you can make maximum impact to your portfolios and your retirement, everything going forward. It is a time for introspective and thinking, but shouldn't be doing this by yourself. Third, you are the type of person who really doesn't have